It's about that time of day again here, folks. Welcome back to your nightly newsletter, boys and girls. Joseph James here. It's Tuesday evening, August 25th, 2015. Boy, oh boy, another exciting day, another exciting day. If you followed the plan from last night's newsletter, did very well on Crude, very well on the S&P. Had to wait a little bit for the S&P, though. Remember what I told you guys? Flags, spiking channels, right, pennants. They're going to make you wait for the best stuff. And boy, oh boy, did we get that. Our patience really paid off well today. Excellent, excellent opportunities across the board today. Hope you guys are able to make some money off it along with us. Back in the action, though. We're only as good as our last trade here. Let's get ready for tomorrow. We have a Wednesday session to get ready for. We got inventories coming up. We got some big Red Star news in the counter tomorrow. There is no doubt about it. We're looking forward to another great session on Wednesday morning. Before we jump into our charts tonight, I do want to remind you guys here, make sure you're watching this newsletter video on our trading blog here at Sideways Markets. There is a link in the description of the YouTube video. If you're watching it on our YouTube page, check the description for a link that'll take you over to this webpage. First of all, a couple things here. Upper left-hand corner, I got a free pass for you. If you're not a member of School of Trade and you'd like to come out and join us in the trade room as a guest, grab your free pass, upper left-hand corner. How about the mailing list? I've got a mailing list here. Every evening, I'd love to send you an email when this newsletter is ready to go out. All I need is your name and your email address. Register for the nightly newsletter mailing list. Right below the video here on the blog, you can download all the charts. All the charts you'll see me using in tonight's video. I've even got some bonus charts in there for you as well. All the charts you're going to see me using in tonight's video, you can download those. They're right below the video, that link that says click here to download today's charts. Over on the right-hand side, there's a link to join our free trial membership. You're going to learn more here as a trial member in 1 week with me here at School of Trade than you will anywhere else on the web. I'll also kick you out a free pass to come out and attend our live trade room. Free trial, membership information, member reviews, and of course, I've always got someone standing by 24/7 to give you guys a hand. Don't forget if you need any help. So make sure you download today's charts and make sure you register for our nightly newsletter mailing list. That way you never have to miss another newsletter video ever again. All right, enough the chit chat here, JJ. Let's get into these charts. Another exceptional day today. Very simple plan. Bear pennant, bear flags, right? Spike in channels. It's pretty much exactly what we had talked about last night. Let's jump into crude oil here, starting out the newsletter for Tuesday evening. Crude oil is bearish, gave us a perfect selling opportunity off of these highs, but it doesn't look like they're going to give us much more than our first two targets on this. Quick first target off at the midline, and then we're trying to hold this thing all the way back down to the end of it. We got the API number. This came out. Probably going to try to push this thing higher here. We'll see what tomorrow brings. But bottom line, though, is sellers right now are looking for buyer failures on the way down to these lows. Buyers, you guys have a difficult job right now waiting patiently for price to get down into oversold territory for the best opportunities right now. Let's look at the key components here on the crude. Key components here to crude oil right now. Bearish trend. We're looking to sell short, right? Want to stay to the short side right now. If you want to be a buyer, you really got to be patient and wait to get these opportunities down around the lows. You really got to wait for this price to dig into oversold territory so you can buy at a discount. Right now, you're trying to buy at a high price, so not a very high probability opportunity here being a buyer right now, even though we may see this price go higher, which we'll talk about right now. So again, bearish trend. I know I'm focused on the sell side right now for crude oil. We also have bear flag. Right now, this bear flag, we talked about this last night. Bear flag coming down. What do we know about these bear flags? We know their strength patterns, right? So we stay to the sell side. We follow the direction of the flagpole, right? The spike down. What else do we know about it? We're going to get tested here, right? Sell the high, sell the high, sell the high. But what else do we know? We know that there's a likelihood of a larger correction before we make that big move down. Why? Why is there likelihood that we get a bigger correction? Well, it has to do with the fact that all the sellers who got short here, right, the ones that threw the fuel on the fire, right, There was a pun intended there. That was one of those old trading jokes, right? So the sellers that get in the way down, they've got to take their profit, and they're spoiled, right? Those sellers are spoiled. They were selling up here, right, at these higher prices. They're not going to be interested in getting in short again until we see this price make another run up and entice them back into the market again. Now, what's causing this price to go higher? Profit taking, bargain hunting, patience by those disciplined sellers. And then we just saw the API number come out. Negative 2.7 was what they were expecting. We get a negative 0.7 on the reading this evening at 4:30. I'm not much of a news trader, but that is also throwing some fuel on this move higher here. So I would not be at all surprised if we wake up tomorrow morning and when we see ourselves sitting right around this between 40 and 41 range right in here. And then what we're going to be doing. We're going to be looking for a buyer failure to bring it right back down. So right now here, we've got three major components here on crude. Bearish trend tells me, I don't care how high it goes, until it starts holding a pullback, I am continuing to look to sell these highs. What are three ways to sell? Reversal pattern, right? You get a reversal pattern. What would be another one? A buyer failure, my favorite. And what else? You could also sell the retraces, right? Sell the retrace on the way back down. So as the price goes up, once it starts coming back down, selling the retrace back down. Second thing here is that bear flag. Again, the bear flag tells us keep looking for selling opportunities at the top of this channel. Don't let this bullish channel fool you. Look a little bit wider here and you can see it's a bear flag. What else does that bear flag tell us? It tells us don't you be surprised if we see this thing make an A, B, C, D move up before we come tumbling back down. Okay, so you may have to be patient. Tomorrow might be another day where we see the majority of the session in the green and just the last little bit of it coming off that high like we saw today, right? Like we saw today. Very, very good example here of a bear flag, right? Very similar to a bear pennant and a spike in channel, which we talked about last night. The only thing you got to worry about for tomorrow is just the inventory report at 10:30 tomorrow. You know what I always do. I don't trade the news. I trade around the news. We'll be sitting on hands from 10:15 till about 10:40, 10:45. And then after that, I'm assuming this price goes higher just because of the way the inventory number usually reacts. I'm assuming it goes higher, and then we'll be waiting for it here, buyer failure, before we get a chance to sell this thing back down. If we do get it to take off at the downside, my gut tells me probably not going lower before we go higher. But if we do take off the downside, we are definitely looking to take profit down at these lows, selling those highs. And then this is where those buyers want to come in. And really, because you're in a bearish trend right now, if you're a bull in a bearish trend, failure patterns are your best friend. So looking for seller failure at that low, right? Look at those sellers try twice and then buy right into those stop losses. If you're a buyer right now, you're really got to be careful because you're in a significant downtrend. So treat it as a scalp until proven otherwise. Tight stop, tight first target. Let the final portion run, okay? Now you get the plan here for crude. Not a lot's changed on crude. We're pretty much executing the same plan that we talked about yesterday. Now, talk about volatility. Holy Christmas. Did I see 3.5 million contracts traded on the S&P? Now, that would be a big deal, except yesterday we saw 5.5 million, over 150% of our average daily 3-month volume. This market is, you can just tell, this market, all hands on deck. What's happening right now, if you're wondering where all the craziness is coming, what's happening right now is you've got traders who are now positioning themselves ahead. These are more long-term traders, of course, positioning themselves ahead of the fall season, right? We now know they've pushed this interest rate hike deep into 2016. We now know, right? We now know we're not going to get any clarity from the FOMC. We've got Pinocchio, right? The puppet master at the People's Bank of China, basically playing Geppetto with their interest rates right now. almost as if they're just shooting from the hip over there, and that's what's causing just this craziness. Now, take a moment, step back on the S&P. Okay, I got a lot of questions today about what are we doing differently? What's happening with all this craziness? Back off the ledge. First of all, turn off the television set. Turn off the news radio. Put down the Bloomberg. Back away from the CNBC. Okay, trust me, these newspapers, these television stations, all of these news websites, they don't make money off advertising by painting a pretty picture. Their job is to scare you. I can't even count how many phone calls we've had this week from non-members. If you remember, you would know we don't do anything different about this. Yes, the ranges are larger. Yes, the price might be moving a little bit faster. But guys, we don't change a single thing. We have a very specific and very simple plan that we follow, and we follow that plan. We don't trade when it doesn't fit inside of our rules. We don't trade all of the craziness that's happening on the headlines. So the first thing I'm going to say about the S&P right now is exactly what I've been repeating all day in my office. Calm down. Calm down. It's okay not to trade if you don't know what's going on. It's okay to sit on hands if things are moving too quickly for you. And it's perfectly fine to say, I'm going to wait until I get more information. Okay, think about it. In any other business on the planet, if you just went spending your money whenever the thing moved right, you'd be broke. You have to know your trade, know your plan, and execute your plan. And that's what we're doing right now on all of these markets. Okay? So just take a deep breath, but turn off the television. Turn off the news radio. Turn all of that fear-mongering off. Because first of all, it's not going to make you any money. It's not going to make you a better trader. And trust me, guys, if those talking heads on TV, if they really could make money off that, they wouldn't be sitting with makeup on and a suit and tie, right? They'd be right here with you and I, trading their accounts, making a killing, okay? So, reality check. Trade your plan. What's the plan here for the S&P? I feel better just talking about it, right? I feel better just talking about it. And I think that's one of the biggest values about being in a trade room, being with a community of traders, and not just rambling around on stock twits all day long, right? I mean, geez, no wonder people are worried, right? You think the guys and gals on stock twits know what they're talking about? I'm sure a few of them do out there, but the majority of them are just looking for answers just like you guys are. So what are we seeing here right now? What we're seeing is we're seeing that bear flag, right? That bear flag, if I can get my drawing tools to work properly. Okay, so we talked about this last night on the S&P. Every time it goes up, I'm looking for a way to sell it back down. Okay, so don't confuse what's happening right now. We just happen to be in one big, large range, and we're going to keep taking nibbles off this high. Worked out beautifully today, exactly the plan we had. You'll notice a little bit of support day there, right? A little bit of support hanging out here right now. So we're going to continue here to look for opportunities to sell as that price goes up. So we got a little bit of waiting to do here right now if you're a seller on the S&P. But not to say, though, that you didn't get handsomely rewarded, right, by your patience on this earlier today. So congratulations on the S&P if you followed the plan, right? You didn't take the bait. Boy, oh boy, what a crazy ride though it was. What's the plan here, S&P? Well, S&P is bearish, trading inside a range. Again, that last chart, I zoomed all the way out. Now we're going to zoom in here on a faster chart time frame. I still had to slow this one down just to really get some sense into this thing here because it was, again, a very, very volatile session. Sellers, you guys and gals are looking for opportunities to sell the range highs with buyer failures, reversal patterns, while the buyers, you guys have a tough job right now. You got to stay patient and wait for this move to test those lows of the range and use seller failures to buy those lows. So here's what happened last night. Last night here, we're coming off this high. We had drawn a channel down from this, right? And we said as high as it goes up, sell it back down. As high as it goes up, sell it back down. You had two really great selling opportunities here. We only got a little bit out of the first one. Got just a handsome reward here, though. Still waiting for that final portion to be filled on that sell off those highs. So sellers, give yourself a pat on the back if you waited patiently for it here today. Problem right now, though, is if you're a seller and you didn't get in on these opportunities that we talked about last night, then we need to stay patient here. And here's what you want to be looking for. Price going up. I get my eyes on this trend line here that we used earlier today as a profit target. And of course, got my eyes here on that trend line. That's going to be the first opportunity to sell short. Second opportunity up top here. Third opportunity here will be all the way back up. Now, in a crazy market like this, failure patterns are going to be your best friend. So what I recommend is waiting for those buyers, because you know there are going to be some buyers here right now thinking it can't keep going lower forever, right? It's got to keep going higher now. I wouldn't bet the farm on it, that's for sure. I'm looking for buyers to try and fail to sell this thing right back down to those lows. So as we go up, buyer failure to sell right back down. And if we do happen to find ourselves all the way up at these highs here, again, I will continue to question the buyers until what? When will I back off my bearish tone? Once we go up, come back, and hold a pullback. Once I see us hold a pullback on the S&P, then I'll start to give some credit to these buyers. But as far as I'm concerned, look at the moving average. Look at this yellow line right in the middle. Every time the buyers try to keep it above the moving average, it gets caught and pulled back down. Every time it goes up, it gets dragged right below it. What that tells me is that there are gamblers out there who are betting on price jumping back up where it came from. And if you didn't know about the flag today, well, you probably thought you were right about that for the majority of the session today until very end when you got that nice. And here's really the proof. Look at how it grinds higher here, right? And then just whoops-a-daisy, just falls right out of bed. These are a lot of clues we use between the moving average and also, again, the market took the stairs higher and looked like it fell right through the trap door and hit back at those lows, right? It just goes to show you there's not a lot of strength here from these buyers. Most likely this is being fueled by profit taking, right? The move higher, profit taking, bargain hunting, and a whole lot of gambling right there by the buyers on the S&P right now. So stay looking for the sell side, but again, I think you're going to have to stay patient right now unless you're holding a position from up near these highs. If you're holding, you know your targets are waiting for you down at support levels below. If we do end up collapsing, this is really the only spot where I can justify being a buyer. And even then, I'm waiting for sellers to try and get caught on the wrong side selling those lows. You know there'll be a couple poor suckers down there that sell that low, and I'll be there to buy right into their stop loss if and when they do. Key components here. Don't forget that bear trend tells me to keep selling, tells me to keep selling, tells me to keep selling. Okay, I understand price is probably going to go higher, but the highest probability opportunities. Remember, we can't predict tomorrow. Nobody can. Okay, all we know is where the highest probability trades are going to be, and that's how professionals trade. We don't need magic. We don't need to predict. We need to know if I took 100 of these trades over the next 3 or 4 months, how many be winners, how many be losses. It's just like giving the ball to LeBron and say, shoot that basketball, because his hit percentage, right, his successful shooting percentage is X amount of percent. Every time he gets the ball, he has to shoot that ball. Okay. Bear flag, don't forget, again, that bear flag really, in my opinion, is what makes sense of all this right now, because if you're an S&P trader, you're not used to seeing all this movement. So most of us, myself included, had to go to a slower time frame chart just to really get it all in there, right? So don't get wrapped up in the herky-jerkiness of this market right now. Look at the big picture. You see the bear flag, stay patient, right, for price, go to those highs, and then sell it right back down. And then last but not least here, the last component I want to keep in mind here is this trading range. Range high, range low, sell the highs, take profit of the lows, buy the lows, profit the highs, right? We're going to see rotation, and I'm going to stay on the sell side of that rotation. Guys and gals, don't forget, this market's a little bit challenging right now because of this range we're getting, right? It's a different personality than we're used to seeing on the S&P. don't go at this alone. Come out and see me tomorrow in the room. We'll walk you right through it. We'll trade it together. Next up here, how about some gold? How about some gold? Now, remember, gold and euro are very, very similar. Remember this last night on the gold? Trading range, bull channel. We talked about, right? We talked about the need to wait patiently on this. Absolutely. Here's another example why if you stayed patient today, you really got rewarded. And if you followed the plan from last night's newsletter, you can see everything worked out very, very accurately, almost as if it was scripted ahead of time. So gold is bullish at the lows of the bull channel after today's pullback off the recent highs. Buyers, we're in a perfect spot right now to start buying once again. And as you can see, we've only got a little further to go down to that measured move at 32.4. So we're in a great place looking for buying. I don't think we're right there yet to be buying. You can see that measured move is still a little ways away. That's really where you want to be buying right now, is that measured move. Okay, if price goes higher without achieving the measured move, then we'll use that resistance area overhead for seller failure, resistance area overhead for seller failure, resistance area overhead for seller failure, and our target is back up at the 69.1. We'll call it 1170, 1184.6. Okay, so buyers, you guys are ready to go, but again, be patient if you're a buyer right now, because I see, well, let's take a look at the key components. First of all, key components here on gold. First of all, we get a bullish trend. Now, what does a bullish trend tell me to do? It tells me to be a buyer, obviously, right? How do we be a buyer? Seller failures, right? Bullish reversals, and buying pullbacks as we go higher. What's the next key component here? The bull channel. The bull channel, we talked about that last night in the sense of rotation, right? We're going to rotate from the lows to the highs, back down to those lows, and now we're in a beautiful spot here to get in at a discounted price on that rotation back to the lows. But here's where we get a little bit more what I think to be useful information. At the very least, it gives us more specifics about what to do for tomorrow, and that is the AB equals CD correction. We talked about this last night, and you can see it's working out perfectly for us here right now. We get a little bit further to go here until we get to that measured move support at 32.4. If you go one step further and you take this trading range here, take that trading range, expand it down one deviation, and that will give you the range expansion. So we have a plethora of support down here around the 32.4 and the 31.1. I got to have some fun with you guys. I'm sorry. The English language is such a fun language to speak. And of course, again, that trading range is what gives us the fourth key component. That tells us that if we do make that second leg down, that's where I really want to dig in and load up to be a buyer. Let's play that game. What if price goes up? What if price goes down? Okay? We know we're bullish right now. I'm not going to consider this to be bearish until what? Until we hold the pullback, right? I'm expecting the price to go higher here eventually, but again, I'm not going to call it a bearish market because I'm sure many of you are saying, but Joe, look at it, it's going lower. Well, it is going lower. Remember, after that big push higher, there's got to be some profit taking, right? They're going to take their profit, right? You would too. If you bought gold and you found yourself making a couple $1,000, you would take your profit. Sellers will sell the highs, right? Bargain hunting at the highs, and price will pull back. Now we're getting geared up here for that next move higher here. Okay? Tomorrow we may have a different story on that. But right now, again, can't predict the future. I can tell you where the highest probability today is going to be, though. So what's the plan? If price goes lower, yes, yes, yes. That's where I want to be looking for a buy. And you know me, I always look for that failure opportunity. I love trading failures. So as we go lower, wait for the sellers to take the bait and then buy right into those stop losses. It requires a little bit more patience. You're not going to be the first one in on the move. You don't need to be. Trust me. The futures markets give us great leverage. You don't need to be the first one buying that move lower. Wait for the sellers to exhaust and buy right into their stop losses. That way you're almost guaranteed to make a quick profit on that trade, and then you can hold the rest of it right up to those resistance areas overhead. So targets overhead as we go lower are going to be back inside that range, and then again, the ultimate target here at 69.1. What if price goes higher though? So we know we would like to dig into these lows a little bit more. What if price goes higher? Well, if price goes higher, you're going to see sellers who clearly are not watching my newsletter, right? You're going to see sellers enter at this range low, right? 49 even. And what I'll be doing is waiting to see those sellers try twice, right, and fail. I'll buy into those sellers' failures, right? So as we go higher here, I don't want to buy into resistance. I want to buy, but I don't want to buy into resistance. So wait for the sellers to try to sell at resistance and buy their failure. Sell at resistance, buy their failure. Sellers enter resistance, buy their failure, and on the way up we go. Now you get the plan for gold. Shall we wrap up here with the mighty euro? The 6E, boy, oh boy, we really nailed this one to the wall last night. Exactly what we had anticipated. We definitely have a little bit more room to go on the euro before we get digging into those channel lows, but we have completed the ABCD, and we've already made our move higher here off a beautiful reversal here, right off the measured move, exactly verbatim what we said last night in the newsletter. So if you took the opportunity to buy this measured move here, you've got targets waiting for you now on the way higher. If you're not in this move already, now you're going to do the same thing we talked about on gold. As the price goes higher here, seller failure, buy into that failure. Seller failure, buy into that failure, and then we're looking at targets waiting for us back up at those range highs. Euro is bullish with the bull flag. Bull flag, talked about this last night. And remember, one of the key components to a flag, a spike in channel, and a pennant pattern, go back and watch last night's newsletter, or just watch till the end of this video, and it will relay right into the last night's video at the end. It'll loop right into it. But we talked about this last night. Remember, these flag patterns, they're going to make it feel like they've gone too far. And just when you start thinking you missed the move going higher, that's when it's going to go higher. So would I be surprised at all if this thing comes back down, takes me out at point of entry, makes a new low, and then goes up? No. I will not be surprised at all. In fact, I almost expect that. I almost expect it. I don't think they're going to give it to us that easily here. I'm definitely not going to miss the move here, giving us that picture-perfect ABCD right into prior support. And again, you'll notice these sellers just can't keep this price below the moving average. They're really struggling to do so. So let's take a look here. Euro is bullish with a bull flag showing the ABCD correction off the highs, exactly what we were waiting for today. Buyers are looking for trades using seller failure at resistance levels, what I just described to you, and keeping an eye on the best place to buy at the low of this bull channel. Okay? Key components here on the euro. Bullish trend tells me keep buying. Buy where? Buy at support. If you're going to buy at resistance as price goes higher, wait to do it after sellers try and fail. We get a bull channel. The bull channel tells us we know where the best opportunities are going to be. They're going to be down around the lows of that channel. So be aware of that if it does make that next push down. The bull flag tells us, right? The bull flag tells us be patient. Okay, the bull flag tells us, remember, these flags, what makes them so challenging is that they're going to go what feels like way too far. And you're going to go, there's no way this thing is still bullish. No. That's exactly what it's planning on doing, right? That's why I said last night's newsletter, these things are built to confuse you, right? These financial markets are built to confuse you. Remember, there's a 50% level here somewhere between that flag, right? Right around here. So it's going to get half off before a lot of these buyers that were buying down at these lows, before you're even going to entice them enough. Next up is the ABCD correction. That ABCD correction, which we already had trigger here today, earlier this afternoon, that got you in the first round. Targets are waiting for you. And again, if we go higher, seller failure, seller failure, seller failure to be a buyer. If we go lower, oh yeah, that's where we want to be loading up here, right, to complete that pull back to those channel lows. And again, you know me, I always like to look for seller failure and buy right into those stop losses. Yeah, I'm not going to be the first person in on the move, but I'll definitely be in with the easiest money on the move, I'll tell you that much. Got to stay long here on the bull side for gold and euro, bearish on the S&P, bearish on the black gold on the crude futures, and what a day, what a week, what a month of August. I can't even believe we're trying to call this a summertime month. Can you imagine what's going to happen when the you-know-what hits the you-know-where after Labor Day weekend? Oh, baby, I can't wait. Guys and gals, I hope you enjoyed tonight's newsletter. I hope you learned something. I hope you earned something with us today. Don't forget, I'll be opening up my trade room tomorrow morning at 8 a.m. Eastern Time. Come out and join me. I got a free trial right on our website here at schooloftrade.com. I can pretty much guarantee you're going to learn more with me in my free trial than anywhere else on the web. That's for sure. We have 3 levels of membership, whether you're brand new to day trading or you're an experienced trader who's looking to add another few tools to your toolbox. And don't forget, I've got someone standing by 24/7, 365 to answer all your questions. My name is Joseph. Keep in touch out there. Drop me a comment. Give me a like or a dislike on my YouTube channel. And as always, join the trial. I'll see you guys same time, same place tomorrow. Trade room opens up at 8 a.m. Newsletter goes out tomorrow night, 8 p.m. You know where to reach me here at School of Trade. I'm out of here for now. Be well out there. Be nice to each other and be here tomorrow. Adios, amigos. Bye-bye for now.